not been as bad as expected. More or less, I would say, in some cases, rather better than expected, I would say.
Stock saw a big rally today. What's your view on the stock?
See, we had been constructive on the stock earlier, but as you know, in the last 2 months, the stock had been under continuous pressure after, in fact, much before the news of that deposit decline came in, and already there was a fear of asset quality being under pressure and everything. So we had been positive. So now what I feel is that probably in terms of value erosion, there has been a lot of damage to the stock already that is done. So I'm not expecting substantial price corrections from here, but the fact is that the bank is still relatively lower capital compared to the larger banks. So when you compare to the larger banks, they are little less prepared in terms of capital adequacy. So as of now, probably I would give it a hold rating instead of my earlier buy, because I feel that probably money will shift to more stronger balance sheet banks rather than banks where there is more possibility of higher dilution at a lower price. So as of now, I would give it a hold rating at the current level.
All right, so that we leave it at that. Thanks so much for joining us. So that's the word on IndusInd Bank. This quarter, that is the previous quarter's numbers, are not as bad as expected, but the problem really is post the lockdown. So in the next 2 quarters is when you'll actually feel the pain. And the stock, as we know, is already down about 70% in the last 3 months. Well, we'll take a quick commercial break on that note, but lots more coming up on the markets and all the happenings that you missed in the day. So do stay tuned in.
Welcome back. You're still with us on Markets Today. Let's go through the rest of the headlines that we are tracking for you and the ones that tell you the story of the day. The fourth headline was the big move that we saw on ICICI Prudential. The stock soared 12% on the back of a strong set in the fourth quarter performance. Abhishek Kothari is still with us after IndusInd. Abhishek, what took ICICI Prudential higher today?
Well, the margin improvement actually surprised the street on the positive front. So if you look at the Q4 VNB, that is value of new business, that grew by 12.5% YY when compared to about 25% growth that they saw for 9-month FY20 VNB. However, the margins improved to 23.8% in Q4 versus 21% for 9 months, given the fact that 74% of the VNB or value of new business came in from protection and non-par business. So the protection annualized premium equivalent actually grew by 55% YOY, driving the margin on the higher side. The share of non-linked products actually increased to 32% when compared to 19% YOY. So with decline in ULIP and increase in protection and non-par business, margins are here to stay for ICICI Pru. Back to you.
All right, thanks a lot for that. That was really the big gainer in trade today. But speaking about ICICI Pru, we had a chance to speak with Nimesh Shah of ICICI Prudential on this whole issue of Franklin Templeton winding down 6 of their debt schemes and the impact this would have on liquidity and, more importantly, the RBI measures to boost mutual funds. Listen in.
If the returns are higher, then the risks are higher. And in this kind of environment, if the risks have played out, in the last 1.5 years also, a lot of papers have become D in the market, and some of the schemes had got affected because of that. So, and there was a lot of side pocketing also which happened because of that. So, it was essentially, my view is that it's up to the credit quality in that particular mutual fund scheme. If the credit quality in the mutual fund scheme is intact, at some